All right, so let's continue. So as I was saying, those are the countries within which, or those are the countries that Ghana is having double taxation agreement with. Now, the next area or the next thing you should also take note of is the advantages of double taxation. The advantages of double taxation. Now, when we talk about the advantages of double taxation, what do we mean? Or what are we trying to say? Number one, the very first advantage of double taxation is that it helps to allocate tax among the treaty partners so that the person does not suffer being taxed twice. So it helps the two countries to allocate tax among themselves so that at the end of the day, nobody will be taxed twice. So they set against each other. The second advantage is that it helps create an environment of fiscal certainty, which encourages trade and investment. So it gives the financial space for one country to know the exact amount of money he is getting from taxation and the exact amount he will be spending out of the taxation. I getting it. So at the end of the day, he knows how much he will spend in investment, he knows how much he's getting from here, on and on and on and on. The next thing too is that it helps in the exchange of ideas and information about the treaty partners. So Ghana and its partners can exchange ideas. Oh, Ghana, this is how I'm doing it and I'm succeeding. I think when you also do it like that, it will also help you succeed. Then Ghana will also learn from it. They will also come to us, we also tell them, oh, let's do it this way, you will succeed in that order. Then it helps in the exchange of ideas and information among the treaty partners. I think I said that one already. Then it also helps to protect international shipping and air transport activities. It helps to protect international shipping and air transport activities. So that is another example of double taxation, and you are supposed to know. It prevents discrimination as it promotes the principle of non-discrimination. That is another example, or that is another advantage of double taxation. Then the final one, it helps prevent international tax avoidance and evasion. You know that basically, once people begin to feel that they are being taxed twice, then they will end up evading tax or avoid tax. There is a difference between tax avoidance and tax evasion. One is criminal and one is not criminal. Tax avoidance is not criminal, but it's illegal. Tax evasion is both criminal and illegal. So when I say tax avoidance, you are deliberately avoiding tax by, let's say, decreasing the income you have earned. So you know that when you earn 10,000, you are supposed to pay tax of 100. That is 10%. You will say, oh, I earn income of 100, so that I pay tax of 10 cedis. I get it. That is tax avoidance. So deliberately manipulating your tax income in order to pay lesser tax is tax avoidance. The tax evasion is you are deliberately refusing to pay. You are doing every means not to even pay a dime to the government. that is what we call tax evasion. So when we say tax avoidance, that is what it means. When we say tax evasion, that is what it means. So you should be able to understand the two so that whatever you are being asked, you should be able to distinguish. In fact, this is a CA question. The difference between tax avoidance and tax evasion. And let's say it's for like 20 marks. You should be able to justify yourself by explaining them very well. Are you getting it? Good. Now, how then do we compute tax when it comes to somebody receiving income or earning income in a foreign country and receiving the income here in the domestic country here or in Ghana here? Now, the procedures involved is that you first of all find the effective tax rates in the foreign country. So they will not tell you the rate at which the person paid that tax. They will just tell you, oh, he earned this income and then he paid this. Finish. You are supposed to determine at what rate did they use to tax this person. And that's the effective tax rate. Then you also find your effective tax rate. As we speak now, we should know our effective tax rate in Ghana here. Then the effective tax rates, you compare the two effective tax rates and see which one is higher, which one is lower. Then you continue from there. Then we have what you call grossing up the income of the person. So if I said I'll be explaining all these things in theory, you will not understand. So we'll take a practical illustration and then we'll go through it, then you understand better. And the practical illustration I'll use to explain for you is the illustration you have been given. That is what I will be using to explain for you. So if you have your illustration, you open to that particular illustration and then you carry it up from there. So if you have your illustration, kindly open to your illustration, then you take it up from there. Now, the assignment you were given, they say you are required to prepare a brief report on the double taxation agreement which exists between Ghana and other countries. That is your question one. You are supposed to prepare a brief report on the double taxation agreement that exists between Ghana and other countries. And I must say that the answers I'm giving you here are for you to, is to guide you on how you are going to answer your question. It's not a vivid answer to your question that you go and copy everything and 100 students are copying the same thing for the lecturer. No. So just see it and then based on that, you frame your own thing. So if I am the student who is answering this thing, I'll first of all explain what the double taxation is to set the tone for whatever answer I'll be given. So I'll say double taxation is a tax principle referring to income taxes paid twice on the same source of income. It can occur when income is taxed at both the corporate level or the personal level. Double taxation also occurs in international trade or investment when the same income is taxed in two different countries. So I give a broad definition on double taxation, and you can see that this, my definition, covers all the advantages I have given you. So from this definition, you can get the advantages of tax allocation by countries. You can get the advantage of fiscal certainty. You can get the advantages of exchange ideas. You can get the advantage of international shipping. You can get the advantage of discrimination. You can get the advantage of international tax avoidance and evasion from it. Now, how does double taxation work? Double taxation often occurs because corporations are considered separate legal entities from their shareholders. And as such, corporations pay taxes on their annual earnings, just like individuals. When corporations pay out dividends to shareholders, those dividend payments incur income tax liabilities for the shareholders who received them, even though the earnings that provide that cash to pay the dividend were already taxed at the corporate level. So these dividends have been already, tax has been withheld from them at the corporate level, but they will be paying tax again to the government. Double taxation is often an unintended consequence of tax legislation. It is generally seen as a negative element of tax system, and tax authorities attempt to avoid it whenever possible. Whenever possible. Then I now went ahead and then say that Ghana have signed tax treaties, commonly referred to as double taxation agreement, with 11 countries. Then I went ahead and then I stated these countries. I said these countries are: 1, the United Kingdom is one of the countries. I have France to be another. I have Belgium to be another. I have Netherlands to be another. I have Germany to be another. South Africa, Switzerland, Denmark, and recently, somewhere in 2017-16 that way, Ghana have signed an agreement with Mauritius and Czech Republic. So these are the latest countries Ghana have signed these agreements with. So any question that you have been given and the countries they are referring to is not among the countries I have given you here, then it means that there is not going to be anything like a tax credit relief for this person. And so therefore, this person will be taxed twice. For this reason, this person will be taxed what? Twice. So this is just my answer to the question 1 that you were given, and we will now go to question 2. If you have any question, raise up your hand. I'll call you and then you'll be on floor. All right. So we can go to question 2, where you have been given a practical question. Agnes Boache. Are you all having the questions? Are you all having it?
Yeah, we're having it.
Okay, all right. Delphine, are you there?
Yes, I'm here.
Okay, can you read for us?
Oh, Sam, I can't see you. I'm charging my phone too.
I've zoomed the question.
Hey, say ma. Hmm. Say ma, suffering. I'm charging the phone.
All right, let's go on. Agnes Boati is a
Same.
controller.
Okay.
Agnes Boati is a financial controller of Republic Bank, Ghana. Her gross salary for the year 2018 was 13,000, from which she contributes Social Security and National Insurance Trust. Ms. Boati was recruited from France, where she had investments. In the year 2018, the gross interest that accrued to her was 7,300, from which a tax of 500 had been deducted, with the remainder of 6,800 being remitted to her in Ghana. Now, the question is, we are to determine the tax credit relief to be granted to Agnes Boati on the basis that a double taxation agreement exists between Ghana and France. Between Ghana and France. So now, if you are to answer this question, the very first thing you are supposed to take note of is what you call the effective tax rates in France. That's the very first thing you have to take note of. You have to find your effective tax rates in France. And effective tax rate in France is given as, come in, your effective tax rate in France is given as the tax the person paid over the gross income and multiply by 100. So to get your effective tax rate, it is given as your effective tax rate, sorry, the tax paid by the gross income multiplied by 100. So in this our situation, if we are to find the effective tax rate paid by this man or this woman, we're told that he paid a tax of 500 from an income that she earned. The income she earned was 7,300. So the 500 over the 7,300 should give us how much in percentage wise. So the gross income here is 7,300 multiplied by 100. So do it and give me the answer.
Same 6.8.
They are getting
6.85.
6.85. So 6.85%. So that is the amount or the percentage of tax rate. So it means that the tax rate in France is 6.85. The tax rate in France now is 6.85. So that is the very first thing that you do. Are you okay? That's the very first thing that you do. Now, the second thing that you do is to find a chargeable income here in Ghana. And to find the chargeable income in Ghana, you know how to do it. We learned that one in our first semester. So, computation of chargeable income. Then you look out for his basic salary. So we're told that his basic salary for the year is 18,000. That's the consolidated salary. Then you add the gross income from France, which is 7,300. When you add the 7,300, how much are you getting?
$25,300.
You are getting 25,300. Good. Then the next thing that you do is to less the SSF. You know SSF is 5.5%. So you do 5.5% of the basic salary, that is the 18,000. How much are you getting?
990.
900.
And 90.
990, is that right?
Yes.
So when you less 990 from this,
2, 4, 3, 4.
you get a double income of how much?
24,310.
310.
Fantastic. So this is his chargeable income. This is what he's supposed to be paying. Sorry, this is the income on which you'll be paying tax in Ghana. So the next thing that you do is to compute this person's tax you are supposed to compute his tax liability or her tax liability. and you take note of his income, the rates, and then the tax. And then the tax is supposed to be paying. Now, for the first brackets, give me some 30 seconds. I wanted to get you the income tax table so that it will guide you in whatever we are doing now. I don't know if I can download this. Now, for the first 3,828 is free. The next 1,200, you are being taxed at 5%. The next 1,440, you are being taxed at 10%. The next 36,000, you are being taxed at 17.5. The next 197,532, you are being taxed at 25. And then exceeding 240,000, you are being taxed at 30,000. I'm trying to see if I can get it for you, but it's not coming. Let me see if I can copy and paste for you. All right, let's see if it will come. Then you appreciate what I'm saying. All right, I think it has worked out. So I'll delete this one. Good. So this is the tax table. I'm copying it for you. So let me place the tax table somewhere here, then you understand. So this is the tax table I'm referring to. So when you end the first 3,828 is free, 1,200, you are being taxed at 5%. Mercy, your hand is up. So let's unmute Mercy. Mercy, let's hear you.
That this thing you have posted, the one the man gave us, no, it is 3,450.
It's outdated.
Pardon?
It's outdated.
Hey,
How much did he give you? 3,000 what?
it was 3,456.
Anyway, Kofi.
And you can see that that particular one, the highest there is 25%.
Pardon?
Can you see that the highest one there is 25%?
Yes.
Mercy, can you see that it is 25% over there?
Yes, yes. That's what
Good.
is my book.
That is the amended one into this one. This is the new one the GRA is using currently. Okay. So
Okay.
to be going by the new one, but when you go to an examination, whatever you have been given in an examination, kindly use that one. Okay.
Okay.
Good. But because we are being trained to become professionals, we will not be using outdated ones as professionals. We'll be going by what the current regime is saying or what is prevailing at the time we are learning. Do you get it? If you go
Yes.
to an interview and then they ask you, what is the current tax rate in Ghana, income tax rate, and you mention 25%, you are dead. It's 30. Are you getting it? So
Yes.
now it has been amended. So you should be able to tell them on this score, not on the old score. Okay. All right.
Okay.
Okay. All right. All right. So we are saying that the first 3,828, 3828 will be nil. We don't tax. The next 1,200 is taxed at 5%. And then the next 1,440 is taxed at 10%. Then the next 36,000 is taxed at 17.5%. So let's start with this one, then we can go our way. So the first one, which is nil, you don't tax, so nothing. Now, this person income is 24,310. So if this person's income is 24,310, and you are supposed to tax him, what the law is saying is that the first 3,820, so you count 3,828 from the 24,310, and then you will not tax him. Are you getting it? The remainder, you count 1,200 from it, and then you tax the 1,200 5%. Then you continue in that order. So I want you to take your calculators, then do the calculation. 24310 minus 3828. How much are we getting?
20,482.
20.
20,482.
2482, right?
Yes, please.
Good. Now, this 3,828, we will not tax it. And that is the nil you are seeing over there. Now, the 20,482, the next bracket 1,200 is saying that if the next bracket is saying that if the money will reach 1,200 and above, then count 1,200 and tax it at 5%. And the money here is 20,000, so you can get 1,200 from inside. So 20,000 minus 1,200, how much is left?
$19,282. 19,282.
19,282, right?
Yes, please.
So when you strike 5% on 1,200, how much are you getting?
60.
60.
Yes, please.
Good. Now, the 19,282 that we are seeing there, the next bracket is saying that count 1,440 if the money will reach, and tax the 1,440 at 10%. And we are having 19,000. You can get 1,440 from this one. So 1,440 from 19,282. How much is left?
17,842.
We are left with 17,842, right?
Yes,
So when you
please.
tax the 1,440 at 10%, you are going to get
4.
14,144, right?
Yes, yes.
Now, the next bracket is saying that if the money will reach 36,000 and over, then count 36,000 from this money and tax it at 17.5. Looking at this particular illustration, the rest of the money left here now is 17,842. It is not even up to 20,000. It is not even up to 30,000, let alone 36,000. So the money left here, we will charge everything here at 17.5. So here we will not write next, but we'll write rest. So we are telling the person that the rest of the money left is 17,842, meaning that the rest of the money that is left here fall within this bracket, but does not exceed this bracket. If it exceeds this bracket, the amount that exceeds this bracket will go to the 25% bracket. And so therefore 17,842 multiplied by 17.5% will be how much?
That's 3,120. 3,122.35.
So sum up everything.
3,326.35.
Three 326.35, right?
Yes, please.
Fantastic. So this is the person's total tax liability. So now, out of the income he has also earned here in Ghana, 24,310, he is also paying tax of 3,326.5. Now, the next thing we are supposed to do now is to find the effective tax rates in Ghana. So just like we did for France, we are going to do the same thing here